we are watching right now, Carol, a pretty interesting sell-off here, down about 1.7% on the S&P 500, but I think it's a complexion of this sell-off that's causing a lot of agita.
I love how you say that. There's some weak economic news, right? We continue to watch news out of D.C. There's concerns about, reports of a possible new coronavirus. And so you kind of add it all up. There's really definitely a risk-off trade in today's session.
Yeah, you really saw it time-stamped, 9:45, 10 o'clock when we got some of that economic data, consumer sentiment, housing services coming in weaker than expected, unsettling investors. And then a little afternoon, Scarlet, when people started really paying attention to this report from the South China Morning Post that actually came out yesterday about a possible new strain of coronavirus.
Let's not forget also there's $2.7 trillion of options tied to stocks and ETFs expiring today, which may be exacerbating some of the price action as well as we bump along the bottom here heading into the close.
Heading into the close, and of course, heading into another important week next week, particularly when it comes to earnings. We have NVIDIA on tap, which is obviously the granddaddy in terms of leading this market rally. And I guess the question is, given it's down this week by 3 or 4%, can that sort of save this rally?
Yeah, it is a big question, right? Whether or not, they see any kind of weakness, that is certainly going to disturb investors, no doubt about it. Right?
A lot to talk about here today as we get the closing bells in New York with the Dow and S&P, NASDAQ. Well, let's just call it all the major indices in the red on the day, and it appears on the week. The Dow down more than 700 points, or about 1.7%. The S&P 500 lower by about 100 points, or 1.7%, and it does look like it is going to close below that 50-day moving average. Similar story for the NASDAQ 100. The NASDAQ composite down more than 400 points, or 2.2%. Let's take a minute, though, to take a look at the Russell 2000. The Russell 2000 lower on the day by almost 3% here on the day, and it is now officially closed below its 200-day moving average, the first time that has happened since late 2023.
All right, that's pretty significant, no doubt about it. I want to just draw your attention to one group, and that's the trucking names. They're down almost 5%. You did have JP Morgan analysts highlighting potential risks coming from Amazon's freight plans to build up its own internal LTL, less than truckload capacity. So there's one sector, Scarlett, that we definitely saw under pressure today.
Absolutely. But you look at the IMAP and it's clear that the pressure is pretty evenly distributed. There is one green spot, that is consumer staples. Those are your classic defensive names. Utilities also little change on the day, but all in all, lots of red. In fact, with 7 out of the 11 groups in the S&P 500 down at least 1%.
All right, guys, I'm going to get to some of the gainers.
Big gainer, Jax.
There you go.
Yeah.
Well, I have
Times
to
get
say,
tough, eat more chocolate, right?
I was so nervous that all my gainers were not going to hold, but
up.
they did. Aren't we happy?
And you did 4.
I did 4.
It's so risky.
I know it was. I had to, because I feel like there's like a lot of fundamental stories at play. Alibaba up about 6% here. This one up something like 14% this week, up almost 50% this month, up almost 70% year to date. It has just been on a tear.
You've been waiting years for this, Carol.
I have been watching this over the last couple of weeks. There's a lot going on. The DeepSeek-driven AI rally has just caused all Chinese names to go higher. But you also did this one reporting higher sales and say it will boost spending on AI over the next 3 years. So it is still down a lot from its peak back in 2020, but it has been on a tear, including in today's session. We mentioned the reports of another possible coronavirus out of China. We got to watch this one, but there's still, if there's something, it's very early on. But again, it's just a developing story. Moderna up 5%, though, as a result. So we did see also Pfizer higher in today's session.
Why are you scaring people? So I mean, just so the story. But can we just make it clear? I mean, this is something they found in a lab.
Correct.
In bats.
Correct.
It's contained to the lab.
And it happens a lot.
And it's contained to the bats. And,
right.
And at least for right now, it hasn't transition to humans.
We talked to Madison Muller, and she said these coronaviruses happen a lot.
Yes.
But, we definitely did see the market move. I'm not trying to freak anybody out.
It's the weekend.
Investors, maybe we should be more worried about bird flu than another coronavirus.
Great point, actually.
Hey, maybe we should all just have a Celsius
I don't
drink.
eat birds anymore.
All right. Let's get to Celsius.
Actually, I had chicken from
soaring 28% in today's session. Company said it would buy rival Alani Nutrition for $1.8 billion in cash and stock. Including $150 million in tax assets. Anyway, investors moving into that one. And I got to mention Nissan. The ADR is up more than 5%, even though its credit was cut to junk by Moody's over its aging lineup.
What?
FT coming out saying that high-level Japanese group is planning to seek an investment from Tesla in Nissan. But
from Tesla.
See? Okay. All right. I'm not freaking anybody out about coronavirus.
Do you know how many
bringing it up.
decliners I had to choose from, Carol? And I only picked
There's an embarrassment of riches.
I only picked 3.
You had so many.
I wanted 4. I wanted 5.
It was harder
I followed
for me
directions, though.
to have gains. Yeah, I've
Okay.
never been known to follow directions.
That's fine. That's why we love you. I want to start with shares of United Health Group. Actually, by far the worst performer in the Dow. Yeah, you heard me say it. Down 7% today. This after the Wall Street Journal reported that the Justice Department has been investigating United Health Group Medicare billing practices. The Journal did report the civil fraud investigation into whether the insurance giant's practices related to patient diagnoses force higher payments from the government's Medicare Advantage program. Hims & Hers Health falling today by 26%. It's the most ever for a daily decline. The FDA said that the shortage of Novo Nordisk's Ozempic and Wegovy has been declared over. Remember, Hims and other telehealth companies, they sell these compounded versions of the weight loss drug Wegovy. They do it at a discount. They're able to do that through this sort of loophole when these drugs are in shortage, but demand is high. U.S. regulations allow pharmacies to make copycat versions of these drugs in shortage. They have been given a period of time where they're still allowed to do this because they're not being cut off right away. Certainly, this did catch investors off guard. Interestingly enough, though, shares were actually higher pre-market after the company announced the acquisition of a peptide manufacturing facility. And finally, Rivian shares down 4.7% today. The company warned it's poised for a first ever decline in EV deliveries in 2025. It's a new challenge for the company after they achieved a long-held goal of profitability.
Let's take a quick look at yields. That was a big part of the story this week. It looked like it was going to be somewhat of a middling week, but we saw a big drop today here, definitely on the back of that economic data, down roughly 7 to 8 basis points across the board, at least for your 10-year yield now. This is the 6th straight week that we've seen yields move lower. For the 2-year, I believe we're now in week 2 of that, but of course, a much different direction than what the market had been betting on, which had been all in on those steepener trades. Those trades really blown up this week. It'll be interesting to see some of the CFTC data coming down the pike this afternoon and whether how married the market is to that trade.
All right. So speaking of the market, you know, it is kind of an interesting day. We definitely saw a risk-off trade, and you saw the VIX move up, so volatility is certainly creeping its way in. But, you know, having said that, you know, I did find a bunch of gainers. I feel like not everything was down across the board. And so I think next week will be interesting to see, you know, economic news as well as NVIDIA and the retail earnings news, too, to see what it says about the U.S. consumer.
Are the dip buyers going to come in? I mean, how durable is this rally? How reliant are these dip buyers? Because it does seem like throughout this rally over the last couple of years, every time there has been some sort of little correction, I don't want to use the term correction, but some sort of little sell-off, the dip buyers have come in. When does that stop?
Maybe we need to wait for NVIDIA to report the results, although it doesn't feel like people are really talking about it as a catalyst the way that they have been in the past.
Well, I think the people are kind of scared. I mean, given how far the stock has run here and given DeepSeek and everything else, the big question is that trajectory in place? But remember, it's not just whether the health of NVIDIA sort of keeps and propels this rally, but when you talk about names like Home Depot, names like Lowe's that are supposed to report here, you're going to get a much better read on consumer spending in light of some of the data that we got today. And then you get a lot of other companies, you know, your TJX's and American Auto Parts.
Wait, do you actually agree with what I said about the importance of the retail earnings next week?
I do.
Wow.
I agree with you a lot of times. I normally don't say it out loud.
There you go.
I know it goes straight to your head. But I mean, in all seriousness, though,
yeah.
it's like we've been asking this of every guest on this show today here about really their take on the U.S. economy, not just whether it's healthy, but is it healthy enough to really keep the rally going?
No, and I think it comes down to that, right? Even if we continue to see the Fed, you know, on hold, inflation still kind of sticky. As long as there's economic growth, right? Companies are going to continue to hold on to workers. Workers are going to continue to, you know, go shopping and buy things. So you have to think about that follow through.
What about the federal government and layoffs at the federal government level? What about the cuts that DOGE is making? To what extent does that affect the economy? Does that affect consumer spending? Does it affect the market in the Washington, D.C. area?
Well, did you see those comments that Scott Cohen made over at the Miami conference today, basically saying that he's expecting a downturn in the economy in the second half precisely because of Washington policy? And that's a big issue, Scarlett. I mean, we talk about this idea next week where we are going to have that budget vote in the House. There's going to be a big fight over that and a lot of questions to what Tim just raised there, Scarlett.
Yeah. Well, for now, bad economic news is bad news for the stock market. I guess if we get to the point where it's just a flood of bad economic news, at some point it's going to flip and people are going to say, well, the Fed's going to come in and ride to the rescue.
All right, this just means I'm going to have pizza tonight and a nice bottle of wine and go watch a movie. I'm just going to tell you that.
When is the wine segment today?
No wines. Can you believe that?
If any day we needed one, it would be today.
We all need a wine
Your
segment.
producers and bookers are slipping.
Emergency wine segment, please.
The news flow is keeping us busy. All right, guys, that's a wrap. Have a good and safe weekend. All right, meanwhile.
They're the best. They're the best.
They are. That's our cross-platform. Radio, TV, YouTube, Bloomberg Originals. Do have a good weekend, everyone. Our team, TV's team, we'll all see you again, same time, same place on Monday.